369 is the key to timing financial markets. Yep, you heard that right. These three numbers are actually behind every single key market swing. And throughout this lecture, I'll be sharing with you exactly how to utilize these numbers to time market swings. Welcome to this new lecture. To begin this lecture, I would like to start with the following opening statement. They can manipulate price, but they cannot manipulate time. What that means is that price is constantly being manipulated as you look at the markets. Time, on the other hand, cannot be controlled. The reason being is because the clock will always keep on moving forward. And because that is the case, we must pay attention to time first before we even consider looking at price. There's some pre-required theory which you must have before diving into this lecture. That means that you must first of all understand AMD cycles, accumulation, manipulation and distribution cycles. Secondly, you must understand time cycles. Thirdly, you must understand intermarket relationship. If you do not fully understand the concepts above, this lecture is not meant for you yet. And you're probably listening to me speak and you're like, what do you mean this lecture isn't for me yet then? The reason why I say so is because what I'm about to share with you is very in-depth information. That means that you must have a strong foundation before you even consider diving into this advanced knowledge. If you are now at a stage where you do not feel like you have mastered the three concepts above, then I highly suggest you to go to my public YouTube channel and actually study the lectures in which I teach them. If you don't do this, you're going to be doing yourself a disservice, because throughout this lecture, I'm going to be referring to the concepts above to make sure that you begin to understand the importance of 369. Let us first take a look at the following schematic. What you can see in front of you is a schematic which represents three circles. Inside of those three circles, what you can see is that there's a triangle. Notice that each circle has a number inside of it. A3, A6 and A9. What if I told you that this schematic right here is actually what is representing the core behind every single financial market? Meaning, it doesn't matter if you're looking at an FX pair, doesn't matter if you're looking at index futures, doesn't matter if you're looking at stocks, doesn't matter if you're looking at crypto pairs. Every single financial market is being ran by these three numbers. That might sound weird to you at first, and you're probably thinking to yourself, how? How could that be possible? Well, let me ask you a question. How is it possible that the high frequency trading algorithms utilized by the wealthy elite know when to actually make their next move? Think about that. There must be a repeating logic which they adhere to all the time. And that logic is based around these key times, which I will share with you throughout this lecture. IPDA times function as a confirmation tool of smart money reversals, entries and exits. What that means is that if you start paying attention to these specific times to define your SMR, your entry or your exit, you'll be able to see exactly when these key turning points are likely going to form. Why? Because every single thing is fractal. Meaning, it doesn't matter if you're looking at a big market maker model or if you're looking at a smaller market maker model. The same repeating logic always applies. When we pay attention to the example of a market maker buy model then, what I want you to see is that the market maker buy model begins with the original consolidation. This original consolidation leads to the sell side of the curve. When we pay attention to what happens at the end of the sell side of the curve, we see the smart money reversal taking place. When this SMR takes place, it's important to note that the underlying order flow will change from sell program into buy program. And as that change in the state of delivery takes place, what happens is that the underlying order flow will change from bearish order flow to bullish order flow. When that bullish order flow kicks off, from that moment in time, I want you to start thinking about the following. How is it possible that price will be repriced towards the high of the original consolidation just like that? Think about that. you must understand that there is a specific window of time in which that will happen. That right there is our distribution cycle. Once you're able to recognize the distribution cycle, you're able to fine-tune and confirm that the distribution cycle is actually going to take place. You do that by paying attention to the triangles placed on this market maker buyer model schematic. Meaning, if you want to confirm that this is the smart money reversal, there are multiple tools which you can utilize. The most commonly known tool to utilize is SMT. However, IPDA times also provide you with a great degree of confirmation of, hey, this is the actual real smart money reversal taking place. When you see the smart money reversal taking place at a time which adds up to 3, 6 or 9, you're able to confirm with a high degree of precision, hey, this is the actual reversal taking place. When the market then displaces in our favor and we see the market create imbalances, the moment that the market retraces into those imbalances, you must understand that this is a fractal market maker buy model being established. That fractal market maker buy model will have a smart money reversal by itself. Within the bigger market maker buy model, this is going to be your lowest buy. You can utilize the same logic to confirm the smart money reversal as you do within the bigger market maker buy model. It's constantly the same repeating steps that we pay attention to. So do you see how objective our analysis all of a sudden becomes? Because we're no longer looking at the markets from the perspective of, oh, you know what? It's simply a price pattern and therefore there's a trade. Or it's simply this indicator giving us a signal and therefore there's a trade. No, we are paying attention to the only two objective variables there are, which are time and price. And until you get to the stage that you purely focus on time and price, your trading is not objective enough yet. So as the market forms a low right here and it displaces higher, we can again see a market maker buy model fractal take place as this retracement lower occurs. When the market then expands higher, what we will be paying attention to is when the original consolidation gets taken out. What we will then pay attention to is that when the market expands in our favor towards the original consolidation, we'll be paying attention to when the original consolidation gets taken out. If you want to be super precise with your exits and you want to make sure that you exit with the highest degree of precision at the absolute potential high, what you would wait for is you would wait for the next time, which adds up to 3, 6 or 9 as the market trades above this original consolidation. When we pay attention to the market maker sell model then, it's exactly the market maker buy model, but then inversed. What you can see is that it begins off with this original consolidation right here. We see the market expand towards the upside. This is the buy side of the curve. And when the market reprices higher and eventually reaches our point of interest, we'll be looking for the smart money reversal to take place. Again, we confirm this smart money reversal by paying attention first of all to the fact whether or not we're currently in a manipulation cycle and whether or not SMT is being established. When those two variables are in play, we can start paying attention to whether or not IPDA time is in play. When we see the market form the absolute high and the market displays towards the downside, from that moment in time, the next retracement higher which will occur is going to set up what? It's going to set up another fractal market maker sell model. When the market then retraces higher, you must understand that as this retracement higher is taking place, it's actually the same schematic as you see within the bigger schematic, but then only within this small blue shaded box. When the buy side of the curve gets delivered, we can be paying attention to the exact same principles as within the bigger market maker sell model. The only difference is the size of the time cycle that we're paying attention to in terms of duration and how big the run higher is going to be. Because if we're trading within this bigger market maker sell model, the retracement higher is of course going to be way smaller. When the market then expands towards the downside and we see another retracement higher takes place, we can again be paying attention to the same repeating principles again and again and again. When the market then forms this fractal market maker sell model with smart money reversal, from that moment in time we anticipate that the market is going to expand towards the final objective, which is this original consolidation's low. Again, if you want to be super precise with exiting, you wait for the nearest IPDA time to exit your position. Now, if you've made it all the way up until this point within this lecture, I want to congratulate you. And the reason being is because I know that many people have already kicked away. They would have probably been like, oh, this is too complicated. I would never be able to understand this. Why is he trading based upon numbers? Well, let me tell you something. It's numbers that rule the world. And you can argue with me all you want. You can go out there and say, no, it's buying and selling pressure driving these markets, and these markets are absolutely not controlled and rigged. But honestly, once you start to dive deeper and you begin to see this every single week, every single day, what's there to say about that? Honestly, I will now be sharing with you different variations of IPDA time and how you can actually apply this logic. What I want you to start looking for, if you're into swing trading or investing, is the following. You're either going to be counting up years plus months plus days, or you're going to be paying attention to purely the months plus days, or you're going to be paying attention to purely the days. But you're probably asking yourself, how is it possible that your analysis is objective if you have multiple variations of IPDA times to pay attention to? Look, you need to understand that there's a specific reason why I had mentioned to you, you need to understand these foundational concepts before you even watch this lecture and dive into this concept. This right here is one of the most advanced timing concepts that you can start to begin paying attention to and which you can start adding to your model. You need to understand that IPDA times are merely a confirmation of an actual reversal taking place within a fractal market maker model. That means that the previous mentioned concepts must be in place in the right order, in the right sequence of events before you even consider paying attention to these times. If you are into day trading, the following times gets paid attention to. You pay attention to the hour plus the minutes, and you pay attention to purely the minutes. And as you dive into the charts, what you will notice is that key market reversals oftentimes occur at either one of these different variables. Once you start to see this again and again and again, and you see that everything which I mentioned prior with regards to AMD cycles, with regards to time cycles logic, with regards to intermarket relationship, you've now been given another confirmation tool to actually look at the markets from, to actually confirm your existing ideas of a swing high or swing low formation. Once you become able to recognize true smart money reversals and you recognize the beginning of new price swings, from that moment in time, you're able to anticipate the right side of the curve to take place. You're able to anticipate now that the low resistance liquidity run is going to take place. A question which I often get asked is, how do you know that the trade setup is very high probable? Well, let me tell you the answer. The answer to that question is literally when every single thing is telling me exactly this is going to happen next. And once you start to recognize that, from that moment in time, you get a sense of confidence behind your analysis because there's nothing telling you that the market is going to do something against that what you have analyzed it to do. That right there is the level of confidence which will get achieved through a lot of backtesting, through a lot of forward testing, and a lot of experience. And that will take a lot of time. But I believe that if you are still watching this lecture up until this point, you already have the patience required that it takes to get to that level. Let us take a look at some chart examples over this past year of all these different facets of IPDA times being applied. First of all, I would like to start with an example of a year plus month plus day reversal as it took place on this stock called AMD. This stock AMD had a beautiful price swing towards the upside throughout 2025, its respective bull market. I recognized after President Trump came out in early April and he put a lot of tariffs on a lot of different countries that this was the perfect manipulation from a news perspective. When I saw the markets open low for that second quarter and I saw the signs of a smart money reversal to place, from that moment in time, I paid attention to, okay, at what time are we going to form a swing low? When I recognized that we formed a swing low on the following date, which is the 8th of April 2025, what that led to is the following calculation. 8 plus 4, why 4? Well, April is the 4th month of the year, plus 2025, that leads to what? That leads to 8 plus 4 equals 12, 12 plus 9 equals 21, that equals 3. Again, think back to 369. From the moment this swing low formed and we saw the market displaced towards the upside, from that moment in time, the buy program kicked off. And that right there provided a beautiful buying opportunity. Ever since, we saw the market run about 144% towards these highs right here, which is the current yearly high. What I want you to take away from this is that, do you notice how I'm not just paying attention to, oh, it's a specific date and therefore a swing low should form. No, I was already anticipating a swing low to form due to the recognition of AMD cycles, time cycles, and I haven't even mentioned intermarket relationship, but you can already assume what intermarket relationship was signaling here when you compare highly correlated stocks. Or another example, which was Meta, which actually confirmed to me that we would see a huge bull market taking place on the US markets. I'm going to be sharing with you a clip from my private mentorship Time and Price, in which I had analyzed back in April that something interesting was taking place. That smart money was literally showing its hand on a very specific day. After this clip has been shared, I will show to you exactly how IPDA time was utilized to confirm that reversal and to take one of the most sweetest trades of this whole year. We're paying attention to Google on the left, which had earnings the past week. We're going to be paying attention to Apple next to it. We're going to be paying attention to Amazon next to it. And we're going to be paying attention to Meta next to it. Now, in case you don't know yet, these four stocks are very big companies within the States. And they play a huge role when it comes to the US economy. And we can utilize these stocks to anticipate when and where price swings are going to form. So if these stocks are all moving in tandem with each other and they're all signaling, for example, let's say higher, then that's a good confirmation, which is taking place, of NASDAQ also rising higher, and ES, and the Dow. What I would like to do, so I would like to look at these charts for a moment, and I would like to pause the lecture again, and I would like you to monitor what you see. I know that some of you don't like to pause these lectures, but trust me, you would want to pause it for this. What I would like you to see is that when you pay attention to the first three stocks which are in front of you, stock 1, stock 2, stock 3, you pay attention to those, you will notice that all of them formed the current low of the month throughout this beginning of the month, meaning throughout this swing point right here. So what you can see is that the lows formed right here around the 7th or 8th of April. When you pay attention to what happened on the fourth stock, however, what you can see is that this stock took out this low. Do you see that? This is SMT, guys. Just annotating it for you. This is weekly SMT which was established. That weekly SMT was to me the trigger. Yes, we're in a buy program on NASDAQ. And I know, yes, that you might be looking at it on NASDAQ now. You might be like, why did we run up higher so quickly? Why did we run up higher so aggressively? Because it's exactly what I would do if I was a market maker. I would induce so much freaking fear into the markets by utilizing the narrative of tariffs, by utilizing the narrative of war and whatever. And whilst everyone is that scared, that is where those great buying opportunities present itself throughout the past week. And that's why every single day I outlined market maker buy models from the moment we formed that low. So what are we monitoring when it comes to these stocks is whether or not we are going to see them all move above their respective monthly opens, which are right here. MO. That's how it gets spotted by the time cycles indicator. If all these stocks are going to see displacement towards the upside and we're going to see NASDAQ displays above its respective daily CB as well, begin to utilize it as support and price, then I really wouldn't be surprised to see huge repricing hard take place. Is it interesting to think about the fact that the majority of these stocks, and basically all of these stocks actually that I have in front of you right now, already reported their earnings, are about to report earnings? Think about what Google. So you've just watched my analysis for my private mentorship, which had outlined that there was something taking place between the Magnificent Seven, which are the 7 biggest US stocks. What occurred was that we saw Meta open low for a new week, taking out a previous week low, whilst we saw the other stocks actually make higher lows. That right there was smart money tipping its hand. It was SMT being established, and that SMT set up the whole repricing higher on all US markets. What I would like to see is that this SMR, smart money reversal, occurred on the 21st of April 2025. What I want you to see is that this smart money reversal took place on a day which adds up to what? It adds up to 3. 2 plus 1 equals 3. Are you beginning to see how by paying attention to the exact reversal times, you're able to anticipate when the true smart money reversal takes place? But again, keep in mind, it's not just the date that is important. No, it's the combination and the right sequence of events which makes this significant. I don't go out there and simply say, oh, you know what, tomorrow is an IPDA date and therefore I'm going to be anticipating a swing low or swing high to form. No, that's not how we use this information, and that's also why if you're completely new, you're probably listening to me speak now and you're like, what are you speaking about? How is this even taking place? You need to understand that it's all connected. Everything which I've been outlining to you for free public here on my YouTube channel is all connected. It's all has the same connection once you start to see the different dots being connected. That right there is one of the most fun realizations any developing trader can have. Because from that moment in time, you begin to accept, wait a minute, it is all already written. All that we need to do is recognize smart money's plan and align ourselves with it. When we pay attention to intraday trading, which I know the majority of you are probably interested in, I utilize the same process as I do on these huge price swings, which take months to take place. Why? Because it's all fractal. Time and price are both fractal, and what it means is that we can apply the same concepts on all different time frames. And you might be wondering to yourself right now, how is it possible that you're able to look at the markets from this level of precision to the minute? Well, you need to realize that when we pay attention to this chart, what you can clearly see is that from 9:30 onwards, we initially reprice higher, the market consolidates. We see the market reprice towards the downside quickly, taking out key time-based sales liquidity pools. As these key time-based sales liquidity pools are taken out, what do you think retail is thinking? Retail will look at the market from the perspective of, hey, it's purely dumping. It's only going to go lower and lower. So what form of liquidity is being engineered? Buy-side liquidity above old highs. And when you look at this chart, you can very clearly see that old highs are up here. What we see taking place is that the market forms this low right here, retracement higher takes place, and then the market has one more push towards the downside. Do you see how violent and big this downward candle right here was? That right there shows to you true manipulation. Why? Because manipulation is always quick and it's always very aggressive. That right there traps the human mind into believing, shit, I should be on board with this now. I should be out there just going market short, chasing the market. And that right there is how they utilize human emotion to trap everyone. You need to be able to detach yourself from that and look at the markets from an objective perspective. And do you see how what I'm doing is I'm combining all these different elements which are time-based and are actually based around very specific algorithmic signatures to look at the markets from this objective perspective, what you see taking place is that at 9:57 a smart money reversal takes place. But this smart money reversal takes place as we form SMT as well. Do you understand that what I'm outlining to you the whole time is the same steps? Is that clicking by now? And do you understand why you cannot ignore the previous mentioned concepts if you want to be using IPDA times? If you do want to purely focus on IPDA times, I can already guarantee you what will happen. You're gonna go out there, you're gonna come to the charts and you think, oh, next IPDA time is here, we should form a high low. Next IPDA time is here, we should form a high low. Next IPDA time is here, we should form a higher low. No, that's not how you utilize this. You utilize this as a confirmation of your existing idea of a smart money reversal taking place. What I want you to see is that as the market is expanding towards the upside, we see the market consolidate and we see it retrace. Notice that the market eventually has one more push towards the upside and it begins to run and begins to rip towards the buyer's liquidity pools objectives. Now, this lecture is mainly on 369 time, but why not throw this out there? When the left side of the curve is very quick and sudden and it is very aggressive, the right side of the curve is going to be very slow and lethargic, meaning there will be a lot of back and forth going throughout that run higher, and that means you need to be able to sit patiently and just wait. When we pay attention to a bearish example then intraday, what I want you to see is that the market was consolidating up here. Notice that throughout this consolidation, buyer's liquidity is being engineered. This right here is the accumulation phase. What I want you to understand is that from the next key open, which is 9:30, we'll be paying attention to whether or not manipulation will take place. At exactly 9:30, we see the market open high and we see it take out this previous 30-minute cycle high. From there on, we see the market consolidate. It's going sideways. Why? Because this is time distortion. And throughout this time distortion, smart money is doing one thing. They're being given the opportunity to begin filling their short orders around a specific price. When there is a specific sign on the highs taking place, that confirms to us that the expansion is now going to take place. What we can be paying attention to is SMT. SMT ends all consolidations. When we see this SMT right here being established, and when you look at the bottom of my screen and you pay attention to time, you will see that this SMT is also taking place throughout this very specific window of time. And we see all of a sudden this big down close candle reprice towards the downside. Do you see how we form this CB right here and how the market retraces into that CB? Let me tell you something. Add up the numbers of the time at which this retracement took place. 9 plus 5 equals 14. Plus 4 equals 18. What does 18 equal? 18 equals 1 plus 8, which equals 9. Or what did you think about the absolute high? 9:30. 9 plus 3 equals 12. 1 plus 2 equals 3. Are you beginning to see how the dots are starting to connect? How once you start to pay attention to when specific highs and lows form, you're able to anticipate, okay, now this is what these high frequency trading algorithms are locked into. It's the when that matters, not just the where. From there on, we see the market expand towards the downside and we see a beautiful sell program taking place. Or let's take a look at another example where I bought both the buy side as I sold the sell side of the curve. What you can see is that exactly at 9:39, saw the market form this low right here and we saw it displace higher. Notice that on the next open low of a 10-minute cycle, I went wrong. Why? Because you need to see that when you pay close attention to my charts, I'm hinting at very specific things to you. Do you see how we took out these relative weak lows? What do you think intermarket relationship is signaling to you there? Intermarket relationship is signaling to you there SMT taking place. manipulation occurred. That manipulation is being confirmed by the SMT, and when you pay attention to the time at which that reversal occurred, 9:39, again add up all of the numbers. 9 plus 3 equals 12. 12 plus 3 equals 21. 21 is 2 plus 1 equals 3. From that moment in time, we see a displacement lag higher taking place and a buy program takes place. The market reprices towards the key buys liquidity pool, and we see the market take out this high right here. The high which I have annotated by this black line is the 951 high. And you might be thinking to yourself, how is it possible that this is the 951 high when the real absolute high on NASDAQ formed a bit after, 2 minutes after 953. What I want you to understand is that when you start paying attention to specifically index futures, you must be paying attention to the other two index futures as well. Meaning, if you're paying attention to NASDAQ for your trading, pay attention to ES, the S&P, and the Dow Jones. Once you start to pay attention to these highly correlated markets, you'll be able to see exactly when they are forming the absolute highs. At this moment in time, at 9:51, ES formed its high whilst NASDAQ made a higher high. Again, S&T. But do you see that on ES, the IPDA time was being followed and it was already telling the story? NASDAQ was being manipulated and ES was simply waiting for NASDAQ to complete its manipulation to reach this key objective, and from there on a sell program took place. Notice that the sell program was very messy with a lot of back and forth going, but the same repeating logic was in play to begin it. Once you start to see this reversal sequence again and again and again, you'll get bored after a while. And you'll be like, is this it? Is this all there is? Let me tell you something. If you right now do not feel bored in your trading and you're super excited every single time that you put on a trade, your trading isn't objective enough. And that's an issue. Because you need to realize that what I'm sharing with you are objective rules in a specific time-based order in which they must occur. And once those dots start to connect, all of a sudden you begin to see, wait a minute, there's no guesswork involved. Once you start to see that mathematical sequences actually move these markets, man oh man oh man, that's when the true fun begins. Because that is when trading will become boring. And that is when you'll be able to say to yourself as well, you know what? Let's decrease the trade frequency, but increase the risk put behind positions. Why? Because you focus on your A++ setups because they're so well defined. To me, when I see traders trade purely based on a price pattern or an indicator that's giving them a signal or whatever it might be, what I always think to myself is, how can you trust it? How can you trust something which is so random? As I started to discover more and more and more with regards to what is actually behind these markets, all of a sudden I was never not confident in my executions. Reason being is because I saw the same repeating principles in both time as price setting up these key market swings. And I'm literally sharing it with you publicly for free now. And again, if you have made it all the way up until this point, I can understand that you're probably right now thinking to yourself, whoa, that's a lot. And it is. But let me tell you something. This right here is the truth. Go into your own charts and investigate. Investigate everything which I'm outlining to you. And then come back to me in a few months with your results. I can already guarantee to you that you will never be able to look at the marks from the same perspective again. The reason being is because you'll finally see what has been so well hidden in plain sight for centuries now. Where at first this process was being done manually, but nowadays, as everything got digitalized, algorithms rule the show. Let's take a look at one more final bearish example before we dive into the conclusion of this lecture. What I want you to see is that at 8:28 I went short right here on the NASDAQ. Notice that when we pay attention to the delivery as it occurred, we saw the market reprice towards the upside, taking out a key buy side liquidity pool right here, which is again time-based, and we see the market form SMT there. This is taking place throughout the manipulation cycle, and from that moment in time we see the signs of a smart money reversal taking place. At 8:28, which again adds up to an IPDA time. Now before I give you the answer, I want you to just pause this lecture for a moment and I want you to try and calculate for yourself whether or not these numbers add up to 3, 6 or 9. I know some of you still don't like to pause these lectures because you just want me to dive into the answers, but trust me, you want to think for yourself now for a moment. 8 plus 2 equals 10. Plus 8 equals 18. 8 plus 1 equals 9. Do you see how it again comes back to 3, 6 or 9? From that moment in time, we see the market reprice towards the downside heavily and a beautiful sell program takes place. All in all, the following summary applies, and this is what I want you to take away from this lecture. You first of all pay attention to recognizing AMD cycles, accumulation, manipulation, distribution cycles. After you have recognized your AMD cycles, you pay attention to your time cycles. After you have recognized your time cycles, its story, pay attention to intermarket relationship. Once you have followed these 3 steps, only then do you consider paying attention to IPDA times. You do not just open a chart, say, oh, this is the nearest IPDA time, we're going to form a swing higher, swing low. No, you must be process oriented. And if you made the mistake of watching this lecture even though you don't understand anything about these concepts above, then it means you've done the wrong thing. Don't worry, you can still study these concepts at first, just put these IPDA times on the back of your mind for a moment and focus on becoming good at them. But I know that some of you are also at a stage where you're already masters at the concepts above and you're now just looking into IPDA times because you know this is going to be the missing piece for you to confirm real smart money reversals within market maker models that are either big market maker models or small market maker models. With that being said, this lecture comes to an end. I hope that you found it insightful and I hope that I didn't burden your mind too much with mathematical calculations because I promise to you this will be worth it. I want to wish you a lot of good luck in your studies. If you would like to see more lectures like these where I simply just teach you very specific concepts, let me know in the comments and be sure to press on the subscribe button as well if you would like to see more lectures like this. Good luck in your studies. I'm rooting for you. Be safe.